Home buying made simple. Why is it simple?
Because we use common sense. Oh, shave it off already. No.
Good morning, my good people of Florida and Georgia. Here's George and Brian again with you with Simple Lending. All right, today we're going to be going over FICO Friday. All right, every Friday we're going to be covering 3 topics you can use to boost your credit when you're in the market to apply for a mortgage. But first, here's George with the rate update.
Today's rate alert. Pricing risk is really high today. It's Friday in the mortgage industry. Fridays are always a panic day, never the best day to lock the rate on a loan. We have crazy volatility this morning. Mortgage bonds open weak and they got worse before starting to claw back some of those gains. Suddenly we see huge gains on the day. 10-year yields is down from the 4.34 it was at a few minutes ago. So this is all sentiment swing. It isn't based on any data or particular headline. Our advice is hold off on locking for now, but very cautiously pay attention and let's watch. We may have to lock those loans. Again, this data is not based on any swing or any data. It is just a panic and the sentiment. Very typical for Fridays. We recommend holding off on locking for right now. Back to you, Brian.
Thank you, George. All right, so first topic we're going to cover today, we're going to go into what makes up your FICO score. All right, so there's 5 key things that make up your FICO score. We're going to specifically hit on one in the later topics today, but just want to go over the overall 5. All right, first one's going to be your payment history, making sure you're making your payments on time. Second one, the amount owed. So specifically today, we're going to cover your revolving utilization. All right, next is going to be the length of your credit history or your credit longevity. The other one is going to be new credit. And last but not least is going to be your credit mix or the diversity of your credit accounts. All right, now George is going to go into credit usage. George?
Thank you, Brian. All right, so a lot of our customers and people out there think that in order for you to have good credit, it's all a matter of having a good positive payment history. As Brian discussed, 35% of what determines your FICO score is your payment history, but 30% of that is also amount owed or your balances. This is a real life example on a credits for a customer. Again, we're trying to get the highest FICO possible because with the rate environment that we have today, we definitely want to get a better interest rate with a higher FICO score. So this particular client has a perfect payment history, no late payments throughout. However, we were still shy and away from a 680 credit score. Most lenders today, 680 puts us at a tier of what elite or prime for better pricing scenario. So I want to go into this to share because this puts into light the importance of amount owed. Again, payment history is some time. However, I want you to take a look at the suggestions that were made to improve the credit score. And I want you to focus that in no point any of the recommendations given to this client was to pay it down to 0 or to close them. As a matter of fact, you will notice that we have some avoid to-dos, which is do not increase debt or apply for any credit. Do not take a cash advance or add a credit card. Do not close any credit account. Maintain all monthly payments on time, and do not finance, purchase, or co-sign a loan. Besides doing those things, it is all, look at this, at no point the suggestions were to pay it off to a completion or to pay it off to a 0 balance. Is actually just asking you to bring your balance down to be within 30% of your limit. That is the key number here. Again, across the board, the suggestions, regardless of how high the balance or even how small the balance is, as you can see, it is still a carefully calculated percentage of the balance to ratio. Once this is performed, this tells you right here the reason why this plan helps is because it improves the revolving utilization by reducing the balance or increasing available credit. Another suggestions that you may hear is to see if you can request an increase of the credit limit, which will also distance the gap between your limit and your balance. The difference is when you ask for an increase in the limit, some of the creditors will want to pull credit, and we don't want to add any inquiry because, as Brian mentioned on the 5 things that determine your score, you also have new credit with the credit mix. So new credit will also be tagged into your inquiries. So we want to keep those to a minimum. We want to go ahead into another hot topic that also regards to credit scores, and that is medical collections. If you are medical collections does affect your FICO score. The collection goes into your credit. It is part of that payment history. So it does affect the FICO score. Now, if you are looking into buying a house, you're looking for a mortgage, a medical collection does not necessarily disqualify you from a mortgage. If your credit score is still in line to qualify for that loan program, loan product, the medical collection has already affected your score, but your score still has you within qualifying numbers. You do not have to pay that medical collection in order to qualify. Now, it does pay off to pay off your medical collections because of this bill that was passed beginning July 1st of 2022. A paid off medical collection is now removed from your credit. So with this bill that they passed, doctor medical services now have to wait a longer period of time before they can actually report that debt against your credit. But if you have paid that, when you pay off a collection on that, a paid off medical collection is now removed from your credit score, from your credit history, which improves your credit score. So now medical collection does pay off because not only do you get that collection paid off, but it also completely gets removed from your credit history, which again cleans up your credit score. Got anything else for us, Brian?
Couldn't have said it better myself, George. Thanks everyone for watching the video. Tune in on Monday for our Monday Mortgage Minute. Thank you.
Thank you.